Welcome back. Well, let's get talking to a couple of banks. We already spoke to the likes of IOB as well as Bank of India earlier in the day. We're now joined by Ashwini Kumar, the CMD of Dena Bank, as well as Vaibhav Agrawal, the VP Research Banking of Angel Broking, joins in to talk about his view on the banking space as well. Afternoon, gentlemen. Mr. Kumar, I'll come to you first. There are a lot of talks, and we also had a discussion which we did with Bank of India earlier in the day about what the DISCOM restructuring could look like. Have you heard anything in terms of the government plan on whether there would be a complete 100% takeover by states of the DISCOM debt, or would it be limited to 50%?
Hello?
Yes, Mr. Kumar, is my voice reaching you?
No, I'm not getting a voice. Was this question to me?
Yes, sir.
It's okay. You did not take me on the line and suddenly you put a question. Okay. Yeah.
So if you could just highlight for us whether you've had any conversations with the government, whether you've heard anything concrete in terms of the DISCOM debt restructuring. For example, would the state governments will possibly take over around 100% or maybe 50% of the DISCOM debt? Has that been touched upon?
No. The talks are already regarding DISCOMs. The talks are there, but so far nothing concrete has come there. But hopefully something is taken over by the government. This is what is being talked about.
Okay. In your interactions or in what you've picked up, sir, would it be 100% takeover of debt by state governments, or would it be limited to 50% and 50% restructuring?
No. Dena Bank's exposure to DISCOMs is around 7,000 crores, out of which about 3,300 crores has been restructured. So I have not had any discussion with the government, but the plan of state government taking over the loan is already under discussions. What amount they take, whether they take 50% or 100%, that is still not very clear.
Okay. All right. And could you just highlight for us in terms of your exposure to DISCOMs, has there been any sort of incremental lending that has taken place by Dena Bank over, say, the past quarter to the DISCOMs? And additionally, which might be the DISCOMs that you do have exposure to?
No, we have exposures to Rajasthan, UP, and a few others. Incrementally, exposure has been taken only where out of restructuring we had to lend for working capital. Otherwise, no fresh sanctions has been made so far to the DISCOMs.
Okay, let's get an analyst view as well. Vaibhav Agrawal is also with us from Angel Broking. Vaibhav, hi, good morning. From your analysis, have you studied the impact of this issue, and are there any banks that you like in particular because of this development, or would it be too early to take a call like this?
Well, of course, we have to wait for the contours of the actual package. But clearly, the whole SEB thing has been an overhang for the banking sector. Because it's not just about the SEB loans itself, and the losses that they are incurring, but the impact it is having on the entire power sector itself and the private sector generation projects, etc. as well. So if the government is able to find a resolution to this problem, I think sentimentally, clearly, and even in terms of the asset quality outlook, as far as at least the power sector is concerned, things would improve. So any package and the credibility of that package could be a positive for the sector.
Okay, all right. Mr. Kumar, just coming back to you and moving away from the entire DISCOM space, what is your sense in terms of credit growth at this point in time? What are you seeing in terms of corporate credit growth as well as maybe incremental lending to stressed tech sectors such as, say, infrastructure and power? Where do you stand?
No, if you see the credit growth year on year, it has slightly improved from 9.2% year on year last year to 9.6% this year. Regarding Dena Bank, our focus has been on retail, SME and agriculture, where our growth vis-a-vis growth of the industry is better, both in consumer lending, agriculture lending, SME lending. So our focus is on these sectors where there's a big improvement in terms of our growth, say for MSME sector, the growth is 3.0%. In the industry, we have grown by about 10%. For consumer durables also, the growth in Dena Bank is 24.7% against 12.7% in the industry. So these are the focus areas where we are growing. Regarding financing to infrastructure, yes, we are open to financing of infrastructure. Wherever we find the projects are viable and they will generate cash and they don't land up into any subsequent issues of environment or policy.
Okay, Vaibhav, let's discuss a couple of these stocks and how you would be placed on them. First, of course, is IDBI, where we have seen a big rally all the way from 50 to the current levels, and the other is IOB, if you cover that.
Well, on IDBI, clearly even at current levels, the stock is trading at about 0.7 times price to book. So the minute you start talking about a possibility of moving it to an Axis Bank kind of a structure, and if you draw the parallel, in terms of price to book of something 2 times plus, clearly, one gets the sense that the upsides over a longer period of time can be quite a lot. Obviously it would not happen overnight. Even in case of Axis Bank, we've seen, back in 2003 onwards, it took almost 3-4 years where, even Axis Bank was trading at that one-time kind of price to book. And as it developed its retail business, as it improved its processes in line with other private banks, it got re-rated. So there would be potential for even IDBI Bank. There would be so much scope to improve processes, incentive structures, etc. So it can be a long journey of improvement. And if the structure is actually made pretty much on lines of Axis Bank, I think it would be a positive for the stock even from current levels. But eventually one has to wait for that event to actually happen. Before that, one would once again look at the near-term issues with the bank. Where the asset quality stress is quite high, their exposure to stress sectors is one of the highest among peers. So in the near term we remain sort of a hold on the stock, but yeah, on this event I think there would be a lot of upside once it actually materializes.
Okay. Mr. Kumar, what might your outlook be on net interest margins? There were certain targets which were put out by the bank post Q1 FY16 where your net interest margin range should be around 2.5 to 2.7%. Now with the base rate cuts that have come through as well, what is your projection in terms of net interest margins? Would there maybe be a lower range that you would be looking at?
No, I think with the cut in base rate, we have cut by about 30 basis points. So assets, about 70% of the assets would be repriced, whereas the deposits which are maturing within 1 year would be around, say, 40% of our total deposits. So in that term, I think the projection which we were expecting to be 2.5 to 2.75 by March 16, that will be slightly impacted. And it should be lower by about 10 to 15 basis points.
Okay, 10 to 15 basis points in terms of a margin picture is what you're looking at. And in terms of asset quality, sir, for example, we heard on IOB and the RBI's prompt corrective action that they've initiated. What might your outlook be in terms of your gross NPAs? You stood at around 6% on a percentage basis in terms of your gross NPLs. Where do you see it maybe by this fiscal end?
No, by this fiscal end, we are definitely trying to bring it substantially down, definitely around 5.5 to 5.75 range. And efforts are afoot for recovery and compromise. We have already decided and got a board permission to sell assets to ARCs of about 2,500 odd crores. We are already going for the process. Similarly, we had identified about a good number of accounts below 2 lakhs, which are also we have put in for sale to ARCs. So we hope, and as the economy recovers, the chances of which appear to be very bright, I think the stress should slowly come down and credit growth picking up. Though our credit growth is around 5% year on year as compared to around 9%, 9.6% of the industry. But we are now moving to increase our credit growth also. So with both numerator and denominator effect, we are hopeful that the NPA should substantially come down in March 16.
Okay, just a quick question. You've initiated 2,500 crores in terms of sale of loans to asset reconstruction companies. It's not already taken place?
No, it has not taken place. We are already in the process. So it should happen before end of December quarter.
Okay. All right, Mr. Kumar, thanks very much for joining in and talking to us. So that's the view coming in from Dana Bank. Vaibhav, just a quick last question from you. Your top picks, from maybe an earnings season perspective?
Well, again, from an earnings season perspective as well, it's the private banks where we expect the numbers will remain relatively consistent. Even they are seeing some amount of asset quality problems, but their P&Ls are more than capable to absorb that, and we're not seeing an undue increase in net NPAs even going ahead. So we would remain positive on private sector banks. Valuations have also corrected for some of the more corporate oriented lenders, and I think that provides an opportunity to enter into these stocks. So we remain a buy on stocks such as ICICI, Axis Bank and Yes Bank, and at present, in fact, we have a buy on HDFC Bank as well.
Okay, fair enough. Vaibhav, any quick disclosures?
Yes, we've recommended these to all our clients.
All right, Vaibhav, thanks very much for joining in and talking to us. Well, that's the view coming in from Angel Broking on the banking space as well. Well, we do have some visuals which are coming in from Prime Minister Modi as well as Angela Merkel in Bengaluru, and that is the NASSCOM event which she is speaking at.